So Bitcoin just crashed, and honestly, my portfolio took a slight hit. And in this video, I want to talk about what happened, what I did, because I came to realize a few things that I actually needed to do. This comes with, the world of options trading. Highly risky. You have to mitigate the risk. So I'm going to talk about that in the video. Stay tuned, guys. But before we get started, this is not financial advice. I'm not a financial advisor. This video is just me documenting my journey, how I take my options Bitcoin trading account from $1,000 to $10,000. And yeah, trade at your own risk. It's very risky. And this is only for educational and entertainment purposes. Okay, so let's get into it. As you can see, guys, Bitcoin crashed badly from about 79,000 when I think it was on 77,000 last time I recorded a video. Now it went all the way down to $74,100. Crazy, crazy. This is extreme volatility. That's why Bitcoin is not for the faint-hearted. Okay, so a few days ago, my portfolio was working. The role that I did was working pretty well. But then Bitcoin crashed. So why did the crash actually occur? This is the reason why. Trump and Iran. So basically, President Trump, breaking news, President Trump is preparing for a fresh round of US military strikes on Iran. So this is the reason that caused the market to bleed out. And because obviously Bitcoin and crypto market is a 24/7 market, it works during the weekend. It's taking basically all the hit compared to the traditional market, which is paused right now on the weekends. And as a result, my portfolio took a hit. So I want to talk about what I did. There are new adjustments that I'm going to be making, what I've realized as well. Okay, from the previous video, I was expecting about $500 in profit in the next few days, but the market completely shifted. The profits that I expected were mostly on the put side. Okay, so this can seem a little bit overwhelming, so let me close this out a little bit so that I can explain to you what's happening step by step, one by one. So basically what happened is that the put are bleeding. My puts are bleeding, my puts are losing badly. As you can see, Bitcoin is under 77,000 and under 76,000. And my bet or my strategy was that, remember, I rolled these positions and I was about to make about $500, right? Right now, I'm losing about $105 on the 77,000 put that expires in it's May 29th. In 5 days, I'm also losing $23 in this 76,000 put that expires in 5 days as well. So overall, I'm losing $127. It's okay. It's all right. But it's not the best. It's not the best. The good thing that's happening right now is that I'm gaining $15 each and every day, even in a loss. That's a beautiful thing. Even in a loss, I'm still getting $15 and I'm getting $6 for the 76K put. So in total, I'm getting about $21 worth of Ether each and every day. What did I do on the calls? On the calls, I brought in fresh calls. As you can see, I don't have any more calls for May 29th. There's nothing anymore there. I only have puts that are left because I closed the positions for a profit. Right? I closed the positions for a profit, and that's basically what happened. I'm going to show the profits on the screen here. That's the beauty of doing strangles. When you do strangles, if one side is losing, the other side is winning. So right now, the calls won, and what I decided to do is I decided to bring in more profit. So I said to myself, okay, if I'm losing on the puts and I'm winning on the calls and I can, close the calls in profit, why not bring in more premium in terms of calls? As you can see, the trade history here, I've made a lot of trades, just today. A lot of trades just today, and I'll explain everything that happened. So you would have seen here that the calls that I have here is further out. This is for June 26, right? The reason why I'm doing this is because I want to bring in more premium. So I'm saying here that by June 26, Bitcoin will stay under 78K. I don't really believe in that. That's why this is like a tactical play. I think that by June, Bitcoin is probably going to be above 70K, 78K, probably 80K as well. I'm not too sure. But the reason why I did this is a tactical play. Why? I want to bring in more profit. I want to bring in more profit. So currently I brought in $200 by opening up this position, and here I brought in about $121 minus this for this position, right? The reason why I did that again, because my puts are in trouble, right? It's losing money currently, so I kind of want to bring in more money to offset that. So essentially what I'm saying is, if Bitcoin continues to crash, right, there's a high chance that I can capture most of this premium, which is overall good for the portfolio. Remember, the portfolio needs to grow from $1,000 to $4,000. Right now, it's not doing too well because of the crash, but I'm managing it. So I'm bringing in more premium. I'm bringing in a total of about $300 of premium. Now, I don't necessarily have to wait for June 26 to capture all of this. If Bitcoin stays within this range or goes lower, I can capture most of it. Okay, so that's my thesis behind this. Now, ideally, I like to sell calls and puts between 7 to 14 days. That's my sweet spot. So meaning my next cycle would have been for June 5th, right? That's what I'm saying. This is just a tactical play. So if Bitcoin bounces up strongly and Bitcoin goes above 77K, right, I will be closing these positions, right? And then I'll be reopening up new call positions for June 5th. Okay. But I need the premium to be slightly better for me to do so. So this is just a tactical play. So this is one of the new adjustments that I made. Now, the puts that are in trouble, I need to be able to roll these puts again because they are in trouble. 77,000 put has been obliterated, as you can see. Bitcoin is about $75,000. So maybe in the next May 29th, maybe the next 5 days, Bitcoin goes above that. That would be great. But the beautiful thing, like I was saying, I'm collecting $21 each and every day for both of these positions. So I'm really hoping that Bitcoin can, go to 76, maybe stay above 77 in the next 5 days. Who knows? Anything can happen. So let's see. So what I want to do is I basically want to close this position and roll it down into the future. I want to bring in more premium. I want to roll it for credit. What I want to do is I want to roll it to June 26. Why? Because I can capture more premium. If I roll it to 75,000 for June 26, if I roll it to 75,000, this is basically the premium that I'll get. 3,131. But remember, I have to multiply that by the size that I want, which is 0.16. So I think I'll get about $450 worth of premium if you multiply it. I'll show it on the screen, the exact calculation. You'll see it. So you will see that the premium that I'm receiving here will be much more than my buyback cost here. That essentially means that I'm rolling for a credit, which is always what you would want to do. Always roll for a credit if you can. Sometimes it doesn't always happen, but the best way to roll for a credit is to roll out in time. So that is my thesis. That is what I want to do for this position because it's my biggest position right here on the put side. This one, I think I'm going to leave it. As you can see, there's a chance that Bitcoin could go back to 76,000. So I'm not really losing much in this position as well. So I could just leave it. Okay. So this is what's happening on the strangles on the option side. So now let's close the options. Let's talk about a new adjustment that I made. So as you would have seen, I no longer have my long Bitcoin call for June, right? What happened to my long Bitcoin call for June? I closed it. If I go back here, let's see, USDC, you would have seen it here. You see, so 80,000 call that I had for June. This is basically a bet saying that if Bitcoin goes to the moon, I can make unlimited profit. This was my upside convexity. But I made a few adjustments. I did a few research, and I said to myself, this is probably not really ideal for me right now. Why? Because when you buy a long call position, right, as you can see, I sold it. When you buy a long call position, essentially what's happened, and I took a loss, by the way, I took a loss of about $200. Right, I'll show the profits and loss on the screen. So I've made a lot of trades. So I've realized a profit of about 100 and something with the calls that I closed, and then I took a loss here of about 200 and something. Which isn't great, but it comes with the adjustment. The reason I could have left it, but I decided to make this adjustment. So I think this adjustment is much more better. So when you buy a call, you're basically saying that if Bitcoin stays above 80K and above, you can make unlimited money. So you'll be making money as Bitcoin continues to go up. But the problem is you have to put down collateral. So I sacrificed about $300 worth of collateral, which is a lot, to keep this position alive, and I was bleeding out. The good thing is the risk is capped, so the maximum you can lose is just the collateral. So I had a changing heart. I did some research. I said, you know what? I think the best option for me would be to add a perp position, perpetual position, as you can see here. So what is the definition of a perp position? A perp position is a contract that never expires. An option is a contract that expires. Very simple. So a perpetual contract never expires, as you can see. So I bought this position. I paid 2,000. So this position costs the 2,000. The value costs about $2,200. But I didn't really pay that amount because I don't have that amount in the account. The account is currently down right now, 3.8 compared to the previous video because of the loss that we took. But it's not down that bad. And that is why I want to use the words of Warren Buffett. The best way for you to make money is to not lose money. Try and lose as little money as possible over time. That's how you can continue to print money and can become wealthy. And that is my goal. So I brought in this position here because, guys, it actually cost me $67 worth of margin to open up this position, even though the amount here, this is a $2,000 position, but it cost me $67 to open up this position, right? And I'm currently up $14. There's a beautiful thing about a perp position. So these are the tools that you can use, in the options world on there, but you have to be familiar with it. So I decided to bring perpetual contracts instead of doing buying long calls. I think it's better because it requires less margin and I can go in and out of the position as I please. It's very liquid, right? It's very liquid. So, and I also introduced a short perp position. This is a long perp position. This is a short perp position. I introduced this position. Why? Because this acts as a hedge, right? It acts as a hedge, and it just smoothens out the maintenance margin and initial margin, which I'll talk about in another video. This is basically helps your account not to blow up. If this thing goes to 100%, your account blows up. So I like to keep my maintenance margin under 50%. So this is pretty good. So adding a short perpetual contract is very nice because what happens is if the market crashes like it did, this contract will gain in value and is going to offset the loss. Right, currently it's losing right now, which is fine. I don't really care. This is just a hedge because the price is going up and I'm bullish. I want the price to continue to go up. That's what I want because overall my delta is positive, so meaning this account is bullish, right? Bullish to neutral, which is where I want to be, right? Yeah, so for this position it cost me $3,000, but the margin, let me show you how much margin I actually had to pay for this position. So this position was 0.04, right? Look here. So it only cost me $84. 84 USDC is in other words dollars. So $84 to control a $3,000 size. This is a beautiful thing about portfolio margin. So these are the adjustments that I basically did, guys. That's what I wanted to talk about. We took a slight loss, but it wasn't detrimental to the portfolio. All these adjustments that I'm doing is for the the benefit of the portfolio long term. The goal is to be long term. Take this account to $10,000, and this is the way to do it. I think I love this new adjustment. It'll be better for me. So now we're watching closely to see if Bitcoin within the next few days can reclaim $76,000-$77,000. That's what I want. But what's very important for me now is to roll this position. I need to roll it. I need to roll it to June 5th, right? That's the goal. I think June 5th. Sorry, not June 20. No. I'm going to roll it to June 2026 because I can bring in more premium. That's what I want to do. Yeah, that's what I want to do. I know for now I'm going to be shying away from because I like to sell weekly to buy weekly options, but this is a tactical, adjustment that I'm doing because, obviously Bitcoin is doing what it's doing. So you have to understand that in the options world, the options is not static, it's dynamic. So you have to be able to make adjustments and things like that, which is very important. So this is basically it, guys. That's what I wanted to talk about, and I really hope that you like the content, that you're following up. If you have any questions, any concerns, feel free to drop a comment. I'll make sure to answer you as soon as possible. Like, comment, subscribe, guys, and share the content, and I'll see you guys in the next one.